Welcome everyone back to Pete's Investing. We review the weekly progress of a random sample of blue chip stocks from Australia, the US and Europe, and these are updated every weekend. If you want me to review a share price, put it in the comments and I'll cover it in a future video. As always, click on the subscribe button and the notification bell to like this video and support this channel. Speaking of channels, let's first of all go to the channel playlist, and that's where we review the indexes on a weekly basis and also the share prices, which is this video, on a weekly basis. We've also got a strategy playlist, and that's where we cover the simple trading strategy we use, the average down process and money management ideas. First, let's go to in terms of the overall guidelines of the chart. First of all, we look at a 17-month horizon on average, and that goes back to about 17 months on average to these charts. And we're looking at a 15-minute time frame for each of these. So remember, whenever we gain a week here, we lose a week over here. So this is only a snapshot of performance. It's not a cumulative result. And it's only to demonstrate the consistency of the results over the 17-month period and how it accumulates profitability on average each month. First, let's talk about CBA. After the position opened just over a week ago, the position closed out on Wednesday, and that's because the CCI closed below the it closed below the zero mark, and it remained in profitable position, so it closed out. And the reason it closed out a few hours later is because we became profitable according to our guidelines, and again refer to our strategy in terms of how it closes out. In other words, it won't close out with a loss. Then it reopened again same day because the CCI broke above initially the -50, then it broke above the zero, and that's where the entry requirements are for it to reopen. So we're opened up with the new position there. Next we look at BHP. BHP remains open since a couple of months ago, so it's been a few months now since we opened. It went a bit of a decline, a gradual rise. It broke above this resistance level, it broke above that, which was promising. Then it hit this other resistance at 51.70 approximately. Then it dropped back below that key resistance, and that's not a good sign, but it's hovering now between these support resistance areas. So if it breaks below this $47, we're in more negative territory. Otherwise, we needed to initially break above this roughly $49.50 level to go into higher territory. We look at Volkswagen. Okay, Volkswagen has been open now for a couple of months. It's been in a steady decline, and it's only started to appreciate in price over the last 3 weeks. So we wanted to break, and it's heading towards this key resistance area of about 328.60 or 50. We wanted to break above there, otherwise there's risk of it falling down again towards this support line. But overall, we're doing quite well profitability-wise for Volkswagen. Telefonica. Price has steadily declined over the last couple of weeks after it closed out about 2 weeks ago. So let's follow the strategy, stay on course. Next key support level is at Euro 367, which is down here. But we needed to break above this level of 395 to achieve promising gains. JPMorgan. Position closed out here this week, late this week. That's a promising sign, although as you can see here, the CCI is recovering and heading towards our zero level, so it probably will open up a new position again on opening of the US market this week. So I'll keep an eye on that, but it's doing quite well overall. Johnson & Johnson. This had a sharp decline on open this week of the US market, and our holding position has been held for over 3 weeks now. Price is hovering around these levels here, these minor support resistance levels. So I wanted to break above that to have promising outlook. Also worth noting for Johnson & Johnson, I put out a video a couple of days ago discussing chart movements of companies which produce COVID vaccines, and Johnson & Johnson is one of those companies. I suggest you look up that video in the share playlist and for an overview of how Johnson & Johnson performed compared to other companies such as Pfizer, AstraZeneca, etc. Lastly, let's look at Caterpillar. After opening about 3 weeks ago, CAT has made a steady recovery this week. That's a promising sign, but it's bouncing off this 245 resistance level. We look forward to breaking well above this level of resistance. Otherwise, there's a risk of price moving back down towards this support level. So let's keep an eye on that. Otherwise, it's doing okay. Now let's look at our profitability results over the, and again, that's measured roughly over 17 months for each of these charts. So over the 17-month period, we've accumulated a return of 7,600. We call that dollars, but it's a mixture of Australian dollars, euro, and US dollars. But you can see there the buy-sell strategy we look at, an overall return of about 54% versus 7,400 on the just buy and hold strategy. That's where you don't sell the product, you just hold the positions from the same entry points you made back here 17 months ago. And on average on this buy-sell strategy, that's returning just under $500 per month. Okay, that's it for this week. Always remember to click on the subscribe button, the like button, and also the notification bell to get updates, such as the vaccine chart review we did last week or this week. And we'll speak to you guys next week. Thank you.